This is All India Radio. In the program News Analysis, tonight we bring you a dialogue on robust growth in industrial sector. The participants are Dr. Yamini Agarwal, Professor, Indian Institute of Finance, and Sanjay Jha, Editor, Global News, London.
Riding on positive impetus provided by improved performance of mining and electricity sector, India's industrial output clawed back to double-digit growth in October after two disappointing months. The IIP index rose to 10.8% versus expectation for an 8.8% increase. It happened by improvement in performance of the sectors such as shipbuilding, power equipment and generators, along with the lower base effect. Yamini, how do you see this turnaround?
I think this turnaround is extremely positive in terms of the industrial production index, because the industry needs to grow at a faster pace to keep the economy at a high growth pattern. Besides, we also need a good industrial input to come through. Why? Because if you're looking at a growth rate of about 9%, or even at the maintenance of about 8.9%, which we've had in the previous half year, we need the industry to support us. So it's a very good turnaround to come through.
But how is it possible? I mean, do you think is it a resurgence of the industrial manufacturing, or suddenly what trend had changed? I mean, there was no apparent sign anywhere, but then suddenly we witnessed it with this figure.
See, when we look at the industrial growth, we also need to understand how the economy is growing and what are the really different aspects which contribute to this growth. So when we look at the September's IIP, which is also about 4.4%, October, which went on to 10.8%, we need to see that there has been festivities in the country and there has been a change in expectations in terms of the industry. Now, the expectations are very well evident from the Sensex. It is also very well evident from the number of IPOs that are coming in. It is also evident from how the industry is looking at the capacity building. So with all these factors, we see that the growth is likely to happen. So the expectation part is playing a very important role.
Though higher growth in October obviously stoke inflationary concern. As you know, if the economy will expand, if it will grow, it will also bring in, its side effects. Now, the Reserve Bank is very unlikely to act on this as far as interest rates is concerned, because they already had done it last week. Now, economists are saying that the RBI's incoming monetary policy stance might move from tight to neutral. Normally they always try to tighten the liquidity so that they can control the inflationary figures. Now, when they're going to do next week monetary policy, what do you think this latest data, how will that push RBI in terms of raising interest rate further so that they can have a better inflationary control? How will they read this?
See, when we look at the inflation is a very prime concern for both the government and the RBI. And from time to time, the government as well as the RBI has been taking a controlling act on the inflation. If you look at the midterm review policy of the RBI, they are saying that they want to keep it at the target level of 5.5% by, let's say, March 2011. And from time to time, they're bringing about different initiatives. Let's say one of the initiatives have been that the interest rates have gone up, or they have raised the interest rates 10 times to 150 basis points. So there has been a lot of increase in the interest rate, primarily to tap the inflation. Now, when we look at the RBI policy, it automatically affects the industrial growth also. Now, RBI and the government both are concerned about it, and they're taking necessary steps from time to time to see that the industry is nowhere threatened by the increase in the interest rates. But at the same time, they do not want to harm the common man, because the common man's worry is the prime worry for them. So I think as far as the inflation is concerned, the RBI's policies with respect to, let's say, the credit markets and the other things are doing well. The money market interest rates have already gone down if you look from the previous week. The long-term yields have also come down. Though the private banks have raised their PLRs, interest-sensitive lending, which is, let's say, the housing sector, there is a rise, but it was much needed because there was cause of concern that there might be a bubble. So automatically RBI from different sectors have been controlling money supply. And I think it's a positive outlook from the RBI with respect to how it wants to control the credit. It is not against the corporates, because if you look, the RBI is bringing about a new banking license norm in January, and it is trying to introduce new banking players. So it wants people to have banking facilities available, but it also wants to make the banking system resilient to any kind of a crisis or any kind of a shock. There is presently a liquidity crunch in the banking sector, and the RBI is also concerned about that. So from time to time, all the policies which the RBI is attempting to, whether to deal with the liquidity crisis, whether to deal with inflation, or whether to deal with the corporates, it is in a holistic view. And the RBI has nowhere outlined that it will not decline interest rates, but it has said that it needs to. It will definitely go in for an increase in the interest rates, primarily to support the common man.
You spoke about RBI's intervention. Yesterday when IIP data came, stock market for the last 3 days were not doing well. It was in the decline, just hammering. And suddenly there was a cheer in the market. Really, stock market welcomed this IIT positive data. So do you think the market, when will it open on Monday, how much of influence, how much of impact will it have?
I think it will have a positive impact. People are positive. They have confidence in the economy. The fundamentals are very good. Despite the global financial crisis which hit us in 2007, if you look at the data and the report of the RBI from Trends and Progress report, there is only a positive sign that the banking sector is doing well. Our banking sector has sufficient capital with them and they're giving a good money to the corporates. You look at the consumer durable sector, which has shown a growth because of which the IPP is also grown. Or you look at the electricity sector, or you look at the infrastructure sector. All these are growing. So we are seeing a positive growth, and I think there is a positive sentiment and there are good fundamentals in the economy, and the government is supporting these good fundamentals. So I think it should do well.
This faster than expected 10.8% growth for the IIP data in the month of October, it would provide certainly a comfort to the policymakers as there were concerns about sustainability of the overall economic momentum in the wake of declaration in the industrial sector, which accounts for around quarter of the gross domestic product of our country. But then faster growth in the sector also augurs well for job creation. How do you see this whole expanding of economy, the growth in the industrial output, as well as the other positive indicators which saying that our economy might probably touch the double digit, as the finance minister said yesterday. So how will that have impact on the employment scenario?
When we look at the policymakers and when we look at the industry, the policymakers are obviously concerned about the employment because we somewhere or the other are associated with the common man. And when we're making all these developments identified with the common man, we see the growth of the industry directly impacting the employment. There has been a survey which says that 500 companies have recently raised their wage bill. And there is also a survey stating that the companies having a problem with scarce capital and scarce human capital. So human capital in terms of employment will be raised. And we are likely to see where and when the capacity enhancement takes place in many of the sectors, they would need more people to be employed. So the employment growth is supposed to be more positive. There is likelihood that the companies would come in with high capacities. Look at the sectors, let's say General Power is coming with an IPO, your Trade and Teller is coming with an IPO, a lot of PSU units are coming up with follow-on issues. So a lot of capacity building is coming up. So employment is likely to go up.
You spoke about the stock market reactions. The last time in October, the numbers were not that good. Suddenly, market plummeted. Now suddenly we see a big cheer up. And in the wake, you said there are so many IPOs coming. So do you think people will have a more confidence because some of the IPOs in 2-3 days time didn't do that well? So will this new positive news about IIP numbers will propel more people to the IPO market?
Yes, I think this positive news about the IIP would obviously lead more people to get into the stock markets, would also lead people to believe that the industry is doing well. Because in the past, we've seen that sometimes when the stock market goes down by 100 points, 150 points, people lose out on their confidence. And they're not very sure whether they want to invest in the IPO because of the returns. But when this kind of a news comes in and the market actually bounces back, which it has done on Friday, automatically what leads to most people to believe is that an IPO is a good investment. And so they are more willing to go in for that investment. Besides, whenever there is an inflation, it is more likely that people would be investing in equities. So IPO seems to be a good route.
We obviously have a good news, so we shouldn't talk about anything negative. But at the same time, I think it's very important to monitor and stimulate the manufacturing sector to sustain the growth in IIP in the months to come. How do you see the role of the manufacturing sector in the coming? Because now you'll be approaching to the fourth quarter. So how do you see the role of the manufacturing sector?
See, when we look at the manufacturing sector, it's a very contributory sector, but we also have the services sector which is also contributing. So manufacturing sector alone does not take the whole thing. But manufacturing sector is being given a lot of impetus through large number of reforms. Government is planning to bring about the companies bill. It is planning to bring about the DTC. It is planning to bring about the goods and services tax bill. So these are various bills and reform processes which the government from time to time is bringing about. Okay, and the reform process is on. So we are likely to see a lot of growth in the manufacturing sector. Besides, the government, if you look at its tax policies in the previous budget, we will see that they have changed their policies in terms of exports and imports to meet out the domestic demands and to provide support to the manufacturing sector. There are different bonds which are allowed to be issued by them. There are different facilities which are being provided. Besides that, financial inclusion as a facility is being provided to people. So all these factors will automatically lead the manufacturing sector to grow.
With this expansion of the growth in the IIP data, how do you see the overall GDP growth? Because Finance Minister has welcomed yesterday's numbers and said that, obviously it will help us to achieve the double-digit GDP growth. But do you see that suddenly this turnaround will help us in achieving a much faster rate of growth than what we had anticipated?
Last half we had 8.9% GDP growth rate, and this time the finance minister is expecting a conservative growth rate of about 8.75%. 9% is what most other people are expecting. I think 9% is a good growth rate for the economy, and this growth rate would help us sustain ourselves, which is very important, because internationally, though the liquidity crisis is partially over, but we are not very sustainable because we are still linked up with the global economy, and somewhere we have to deal with the global economy as well. So we are concerned with how the global economy also changes. So if we grow too fast, we might have problems. So as an emerging economy, it is best to have a sustainable growth rate of around 9% or so. We cannot directly compete in terms of the manufacturing sector with China because we've not created that much kind of facility. But the ministers from various ministries have been looking at those aspects as well. Like I'd heard the education minister bringing about education reforms for training and skill development for people, to be supplied to the industry, which is running short on human capital, which will obviously create more employment. So we are seeing a lot of growth happening.
Do you see there is any area of concern as far as the industrial output is concerned? I mean, should we be worried about that one sector or one area could be hit and then we will be back to the square, or everything seems to be fine now in the coming days?
The government and the RBI needs to take a strong hold on one, inflation. We need to be concerned about that. And the second is the scarcity of capital. So if these two concerns are met through, I don't think there should be any stopping in terms of our growth. Besides, the government is also looking into the agricultural production and the infrastructure growth, which are two prime important core areas for our development. Now, agriculture, again, I suggest that the government has been taking steps, and it is again from time to time is taking steps. For the infrastructure sector, you will see the infrastructure bonds are already out, the tax breaks are already available, so the infrastructure is again being given an impetus. Given these two sectors' growth, given that we are able to maintain our inflation in time, and the capital does not fall short of the requirements, we are likely to see a good growth rate. So we should not have a problem, but provided these are managed well.
A lot of people are dependent on the agriculture sector, so you cannot let agriculture sector languish and go in a negative growth. So what's your idea about the agriculture sector? What should we do to make this growth even faster? Because, industry and agriculture both can work together and then bring us, to the trajectory of the faster growth.
I completely agree with you. Agriculture and industry both have to work hand in hand. When we saw a decline in the agriculture sector, we also saw a decline in the industrial growth. So it's not that the industrial growth can go alone, the agriculture growth alone can go. Now for them to go together, there have been large number of PPPs which have been started where the agriculture and the industry are working together. Let's say a very simple example is corporate farming. So the corporate farming provides sufficient amount of growth with the agriculture as well as with the industry. A small simple example. Besides, for the development of the agriculture, large number of equipments are being introduced both by the government and by the private industrial owners. So as far as the agriculture growth is concerned, it is being provided by the industry and the government. Now what has again come at the support is the banking sector. If you look at the banking sector, there have been large number of instruments which have been introduced for the agriculturalists.
We hope that agriculture can also come to the same level of growth like the industry and help our economy to expand faster. Thank you very much, Yamini.
You were listening to a dialogue on robust growth in industrial sector. The participants were Dr. Yamini Agarwal, Professor, Indian Institute of Finance, and Sanjay Jha, Editor, Global News, London. It came to you in the program News Analysis, produced and presented by the News Services Division of All India Radio. This program is also available on our website, newsonair.nic.in. You may email your opinion about this program at talksensd@air.org.in.